With growing political instability, market volatility increases. After a strong rally on Monday, oil quotes also rushed up on geopolitical news on Tuesday. As a result, Brent crude oil reached the level of $99 per barrel for the first time since 2014, but the global benchmark price closed down. Statements around the situation in Ukraine remain the main driving force in the market. The rapid growth was caused by aggravating tensions and the announcement of sanctions against Russia by a number of states. In particular, Germany decided to suspend the certification of Nord Stream 2. However, the United States calmed the markets, as their sanctions against Russia turned out to be far from harsh. Obviously, now the future of oil prices depends on further developments in the conflict over Ukraine. If the borders of the DPR and LPR remain within the limits of the Donetsk and Luhansk regions and diplomatic negotiations continue, oil prices will most likely drop to at least $80 per barrel. Any aggravation of the conflict will inevitably pull the quotes up. Again, there is no point in relying on technical indicators in the current situation, since they now play a secondary role in the market. On Tuesday, Brent crude oil touched another high, but then pulled back to $93.85 per barrel. Given that the price of the asset has long been overheated by speculators, the benchmark is expected to continue its moderate decline today, provided that there are no new provocative political statements. Otherwise, the quote may head towards $100 per barrel again. On Tuesday, the currency market continued its nosedive, but managed to reverse by late trading. The Russian market's attempts to recover were quite successful. Russia's MOEX index recouped about 1.5%. The ruble advanced by 1.2% after hitting multi-year lows. Growth in the volume of the Russian currency can be attributed to Biden's statements. The anti-Russian sanctions announced on Tuesday turned out to be insignificant. At the same time, it's worth keeping in mind that policymakers continue to unveil fresh sanctions targeting Russia, as well as there are continuing reports of the further escalation of the conflict. Against this background, the foreign exchange market may turn around at any time. From a technical point of view, on Tuesday, the dollar-ruble pair touched the level of 80 rubles per dollar, the high posted on October 30, 2020, but then pulled back. If the price slides and fixes at least below 77 rubles per dollar, the ruble will have a chance of gaining value. If the price consolidates above $80 on the 4-hour chart, the Russian currency will extend losses. However, the main drivers of the market are currently geopolitical risks and speculators, so it's too risky to rely entirely on levels. News trading seems to be more relevant. Meanwhile, gold continues to trade sideways within a narrow price range limited by the levels of $1,914 and $1,893. With easing geopolitical tensions, the subdued dynamics of the asset look quite logical. The lower the geopolitical risks, the lower the demand for safe haven assets. Nevertheless, the precious metal has every chance to resume its bullish run, as investors still prefer stable investment instruments. As for technical analysis, gold futures remain range-bound. On Tuesday, the asset tried to overcome the local high of July 1, 2021, but failed. As a result, the metal returned to the area of $1,900 per ounce. Gold futures will advance if the price consolidates above $1,916 per ounce on the 4-hour chart. Alternatively, the metal may stagnate around $1,900. This was the forecast from our analysts for today. Please subscribe to our YouTube channel to keep track of all the latest financial events together with us on InstaForex TV. Have a nice trading day and see you back soon.